Hello everyone, I'm Shubham from Sumit Capital, and today we are going to talk about the topic which is called Robo-Advisory and discuss all the reasons why it is so popular nowadays. Keeping out emotions or biases while picking the stocks was not possible a few years back because mostly the analysis was done by humans. But with the rise of robo-advisories, it has now been made possible. So, simply put, robo advisories are digital platforms which offer personalized financial advisory services to masses using machine learning algorithms without any human intervention. While the code is developed by humans, but the parameters on which a stock is picked, it is decided by algorithms. Robo advisors help us with one time investments as well as they help us in rebalancing our portfolios. So, portfolio rebalancing is done based on an investor's risk reward appetite as well as his long term goals. In recent times, robo advisory firms have come out as a cost effective replacement of investment advisors. These firms are also called digital advice platforms or automated investment advisors. Now let's discuss about the present state of robo advisors. Robo advisors is a relatively new concept in India, but its list has been continuously growing at a fast pace. But they have been around in US for a pretty long time. Inception of robo-advisory firms could be traced back to the financial crisis that happened in 2008 in the USA. Since then, their numbers have substantially increased, and their assets under management, that is AUM, has also been increasing at a higher rate. Because of India's rapid population growth, many new people will be joining the industry, will be joining the workforces, and will be looking to invest their first salary. So it goes without saying that there's a huge upside in being a robo advisory space participant right now. Out of all the robo advisory firms currently present in the country, only 30% of the firms are externally funded. 58% of the firms in India in the space of robo advisory are based out of Mumbai and Bangalore. Some of the most notable and key players in the robo advisory space in the country currently are IndWealth, Small Case, and Scriptbox. Now let's talk about some of the differences when it comes to robo advisory between India and the USA. So USA is a very mature market, and unlike India, the concept of robo advisory is not new for them. So the first major difference is in the process of investing through robo advisors. In US, the whole process is automated, that is from selection of stocks till the carrying out of the order. Everything is automated, but in India, the user has to manually authenticate the process and then the transaction carries out. The second major difference being where the money is invested. So in USA, the funds that are allocated via robo-advisors, they're invested in ETFs. But in India, since ETFs are a relatively new concept when compared to US, the funds are mainly invested in mutual fund houses. So the next point is fee structure. In USA, the firms charge their fee based on the assets under management. For example, Betterment, which is the major player in the robo-advisory space, charges 0.25% as 0.25% of AUM as the fee, whereas in India the fee structure is based on flat fee structure, which is charged annually. So the next point is tax loss harvesting. So tax loss harvesting is a process where you sell your investments which have incurred losses in order to offset gains made in other investments with the aim of reducing tax payments. This is an important aspect of robo-advisory firms in the USA, whereas in India, not so much. In the table attached, we can clearly see that expected AUM growth for 2023 for India is a staggering 40%, whereas in US it's only 17%. Now let's talk about the typical process a user has to go through in order to make use of robo-advisory service in India. So first, an investor has to make an account on the robo-advisory platform. Now, some platforms, especially if they allow transactions on their websites, they ask the users for the bank details, their PAN card details, as well as their KYC details. So next part is filling up the questionnaire. As a user, the portal will ask you some questions to which you have to answer in detail in order for them to assess some of the things such as your financial liabilities, your assets, your financial goals, your risk appetite, and your saving and spending patterns. So after filling up the questionnaire, the responses are sent back to machine learning models in order to assess and identify uh, best financial products suited for you and to generate insights. The findings are then presented to the user based on his personal risk appetite level and his financial goals. The platform's algorithm even tells you the amount that you have to invest and into what kind of categories. This could be diversified, equity, debt, or gold. The last step is where the user has to approve the changes which are suggested by the platform, and after doing so the changes are then sent to the exchange and the transactions happen. Let's look at the types of robo-advisories. The first one is fund-based robo-advisories, which give suggestions to the customers based on their goals. These are good options for customers which are for investors which are new as well as experienced, which have low risk appetite. Next is equity-based robo-advisory. So as the name suggests, these robo-advisories offers investments in equity-based funds. These are suitable for experienced investors which have in-depth knowledge of equity markets and which have moderate to aggressive risk appetite. So the next in line are comprehensive wealth robo-advisors. The main aim of these firms is to deliver 360 degrees financial solutions which aim to increase the net worth of their investors. So now let's discuss why robo-advisories are in trend currently in India. So up until now, people in India have been making their investment decisions based on three ways. First one being do it yourself, that is, they research the stock themselves based on their understanding of the stock market and they purchase the stocks. The next one is they buy what their agent tells them to, and the last one is they hire an investment advisor. However, after the robo-advisories came into the picture, they have started offering significant advantages over the traditional methods of investing. The first one being ease of use. The platforms, the digital platforms that robo-advisories offer, their interface is very intuitive and easy to use, and hence it makes the process of investing for the first time very easy for a beginner as well as for a seasoned investor. So the next point in the favor of robo-advisories is the cost effectiveness factor. So the new investors who want to have access to quality financial advice but are not interested in paying the fees of hiring a full-fledged investment advisor, this is a very good option. In recent times, some quant-based funds have generated lucrative returns to the point that they've even beaten the index returns. However, this is not a generalization and is only applicable in few cases. Now, let's talk about difficulties that robo-advisory as an industry still needs to overcome. The first thing that people need to understand when it comes to investment advice is that there is no one size fits all. Companies will tell you that they customize their plans according to your risk appetite and your needs, but there's a limit to customizations that can take place. Now, for investors which are contemplating whether to use robo advisors instead of financial advisors, the most important point for them to understand is the limit of these services. For instance, you may not be able to talk with an advisor when, say, the market is volatile. Most of the investment advice from these robo-advisory firms are structured around long-term investments, so they might not work if you're planning to invest short-term. Hence, it might be difficult for new investors to stay invested. Now, it is a fact that institutional investors and high net worth individuals, they require more complex advice than retail or individual investors. These investors might be few in number, but they have significant funds to invest. Now, according to a survey carried out by CFA Institute, these ultra high net worth investors are less likely to use the service of robo advisory firms and are more likely to continue with human financial advisors. Now, let's talk about the hybrid model. Robo advisors have two variations. First one is pure robo advisor, the second one is a hybrid robo advisors. Now, as the name suggests, pure robo-advisors are free from any human intervention in the advice and execution process. And a hybrid model is where at the back end, an advisor or analyst is aided by algorithms, and at the front end, the advisory is given by humans. Now, this model offers the best of the both worlds. That is, while the portfolio is generated through automation, there is scope for human intervention. Now that we have reached the end of this video, let's draw some conclusions. Robo-advisory industry is doing a great job in bringing personal financial management to the masses. Robo-advisory services can even reach the lower strata of the society and help in financial inclusion, as the platform that they offer are easy to use and very accessible. Accuracy of the advice and its suitability for the clients are two aspects which still need to be addressed in order for clients to adopt these services. It goes without saying that whatever the financial products these firms offer you, you as an investor have to evaluate the range of asset classes first and then invest. We have many examples in the finance domain where technology has brought changes but has not replaced humans. Similarly, robo-advisors are here to stay, but they will not replace human or financial advisors. In the coming times, we will witness a coexistence between human and robo-advisors, and this will be the new normal in the wealth management space. I hope you have enjoyed this video. I thank you for your valuable time, and please check out sumitcapital.com for more details.